Good afternoon, guys. It's Saturday, July 9th. My name is Dave Coker, and this is Talking About Finance. So let's dive right in. All right, guys, we've got the S&P 500 here over the past week. My gosh, it is green again. It's green. It's a mixed bag on energy, basics, materials, and utilities, but everything else seemed to have performed well. The S&P 500 was up 1.9% on the week. Now it's down about 18.2% year to date. The VIX traded down slightly, closing the week at 24.64. It opened at 28.5, so nice drop there. The 10-year note closed down this week at 3.08%. It's up 1.5% year to date. We're starting after the Fed minutes to get a little bit more clarity on interest rates, and we suspect another 75 basis point rate hike this month, a 50 basis point rate hike in September, and then a consensus among my buddies and myself, it seems to be we're going to see the Fed pause. And 2023, Q1, you're going to see rates drop. Just the idea that we've got right now. I think I mentioned before that the U.S. is already in a recession. I've just got that feeling. And if you look at the GDP now data from the Atlanta Fed, it's their nowcasting model, we're going to see a roughly 2.1% drop in GDP for Q2 2022, which of course would mean the U.S. is in a recession, but we'll talk more about that later. Oil closed the week at 104.70. It's down about 3.4% week on week, up about 39% year to date. It's not really clear if it's the economy slowing and demand is falling, or has the coordinated releases of oil from the strategic petroleum reserves done the trick, or maybe a combination of the two. Personally, I think releasing oil from Strategic Petroleum Reserve is irresponsible. We've seen about 250,000 barrels over the past, I believe, 3 weeks. I got some data someplace. I'm writing a paper for it. We've seen that released, and I don't know. I just don't believe. I don't know why they're doing that now. Well, I do know in the States it's for political, because people drive and take holidays. So Mr. Biden wants to look good, but it's going to be a cold, long, hard winter, especially if Russia starts messing around with output. But in any case, guys, let's keep the faith. I bought Bitcoin yesterday morning like I do every Friday. I grabbed some Ripple last week, building up a huge position there. I bought stocks. So you can blame me about the markets trading up. The last bull is alive and kicking and buying stocks, guys. I buy stocks every month, and I use other people's money. Some people call it dividends, but I just get the kick out of buying stocks with other people's money. I really like the idea of using cash flow from my stocks to buy more stocks. It's weirdly self-referential, but in a cool way. It's actually pretty interesting. Now, here's something interesting that we were talking about. Now, in the UK, this is UK specific, they've had these for a while, but they haven't been too popular. But now, because of the booming housing market, it looks like uptake's starting to really, really pick up. And they're actually offering these for people that are older than, you might say, 25 or 20. In fact, we do know somebody on the group in 48, and she picked one up. God, I don't know. It's really strange. It's permanent debt. I don't really like it. I had a 25-year mortgage, which I detested, and I killed it in 8.2 years. Still happy about that. So I'm not so sure about that. Please be careful about considering something like this. And Mr. Biden last year, he brought this on himself. He was cackling about how much Americans were saving on the 4th of July cookout. Well, you know, people pay attention and they revisit. And yeah, you're not really saving money this time around. It's up substantially compared to year on year. And this all leads into something Dalio's been pushing, but it's been around for a long time. We're starting to see a sharp transition in the United States. We're almost at the edge. Take a look at these dots, number 10, overextended. We're moving into decline, although this is his chart, his opinion. I tend to think we're sharply along the way. I tend to think we're right up to about number 13, maybe 14 myself. Not good. And now you know why I bought a whole bunch of gold and silver March of 2019. Now you know why the greater bulk of my wealth is in property. It's interesting when you start to think about this stuff. It's inevitable, really. And we'll talk more about that in a later episode. I've got some interesting slides I did for a client. Now, we're starting to see what I like to call 1984 doublespeak coming up. And we know that last quarter the U.S. contracted. And we know, looking at the Atlanta Fed GDP model, GDP now model, I should say, nowcasting, we know, and it's fairly accurate as we get closer to the release date, we know the U.S. likely is going to have another quarter of contraction. Well, the media is going into the stupidity, and I don't know who this guy Jeffrey is, and is that how you spell Jeffrey? I thought there was a couple E's in there. There's only one, but he has to be special, doesn't he? I don't know where he got his journalism degree, or if he got a journalism degree, but dude, do some basic research, please. This is really pathetic. And yeah, I did send a complaint email because I just don't think this stupidity should be tolerated. But regardless, really interesting about gold and silver. Somebody put this on the list. I'm not quite sure where it came from. Goldandsilver.com's listed. I'm not sure who gave it to me or who put it on the channel so we could all talk about it. But we did spend about a day talking about it. And yeah, we tend to see these big sell-offs and then big rebounds. And the person that put this together tracked it for 08, 2020, and 2022. We're just waiting. We're watching. We're looking. We're going to see. Been a fairly decent sell-off in both gold and silver. I'm still up because I opened those positions in March 2019. You see, guys, this is transparency. I'm not one of these jerks on social media. I'm my own kind of jerk. But I'm not one of these jerks on social media or an idiot that constantly talks about profits. No, I tell you what I bought. I bought gold and silver in March of 2019. You can do the math. I'll tell you when I'm selling it. And if I sell it, I'm not going to take, well, I have to think. I'm very committed to the position. And actually, after I bought silver, if you look at the charts, it did swing to a loss. I bought more. So I'm not quite sure what it'll do if it goes flat. I don't think it will. I tend to think it lags inflation, and we're going to see a big bounce there. This is really good. I just love stuff like this, okay? Now, we know that oil dropped below 100. It's currently trading about 104, as we talked about in the preamble. Really interesting. We got two different banks, two different predictions, wildly different. Oh, my God. So where's it going to be? Like 170? I don't know. It's like, take the average of these two. They're fairly different. And again, you'd have to go through and read the articles in general, but they do mention some of the same factors. And I know Citi said even if Russia cuts, if the U.S. goes into a recession, we're going to see $65 a barrel oil. Not so sure about that. We'll have to actually see. Now, this is pervasive, guys. In other words, it's just not Citi and JP Morgan talking about the price of oil. We're seeing it in other markets, right? Look at equity markets. We're looking at Tesla. JP Morgan and Deutsche Bank both disagree sharply on where Tesla's going to be. It's really interesting just looking at that stuff, guys. Don't pay too much attention. It's widely known that analysts' forecasts are wrong. But retail people pay a great deal of attention to it. I pay a great deal of attention to it, but I joke. And I like to say I joke because I love, or I kid because I love. No, I detest, right? but yeah, it's interesting. Okay, here we go. Here are the golden rules for trading crypto, right? You buy more, and then you take your profit. No, you're doing it wrong. What do you do with crypto? Well, first of all, crypto's crypto, but Bitcoin is Bitcoin. So you don't buy no crappy crypto coin, you buy Bitcoin. Maybe Ethereum. I got a lot of space for Ethereum, a lot of time for Ethereum. That's it, dude. Oh yeah, well I got Ripple as well, but that's it. I actually I don't really own Ethereum. I make NFTs and sell them, and I get paid in Ethereum. I've got a bunch of Ethereum. I don't know how much, not substantial amount. I've got a lot of Ripple, but Bitcoin is the coin, the cryptocurrency that I've been buying every Friday, as you know, for years. So no, none of this garbage where you buy and take profit. Buy and hold. Or as we say in the community, hodl. Hold on for dear life. And this is really wild. This is somebody following up on Plan B's models. You can, you got the Twitter handle there, got a website you can go look at. What we're doing is we're looking at halving cycles. And we're looking at the transition of the currency, of the coin, during these halving cycles. Now, it starts out on the extreme left when Bitcoin produced every 10 minutes, it produced 50 Bitcoin. Then we moved to 25 Bitcoin, the second bubble. Then we moved to 12.5 Bitcoin, the third bubble. And now we're in the fourth bubble. 6.25 Bitcoin every 10 minutes. Now remember the rule, guys, on these. Every 210,000 cycles, roughly every 4 years, we see what's called a halving. From 50 to 25 to 12.5 to 6.25, where we are today. But check this out. This is really interesting, guys, because it appears, according to this guy's work, and I'm agnostic, I do like the action. I'm not going to try and sell you on it, though. But he tends to think we're transitioning as we approach the next halving, which will be in May of 2024. So we're a little bit of a ways away from it right now. But as we approach the next halving, he seems to think we're going to enter another bull market. Yeah, I hope so. All right, guys, that's it for tonight. Hope you have a great weekend. Have a really profitable week. It's going to be fantastic. And keep in mind, the night is young. We were carousing. We're going to go back out carousing. Take care, guys.